After giving a sharp bullish candle last week, oil traded with a bullish bias yet again, and still it failed to breach past the levels at 82.6, which I mentioned in my last week's analysis. At the same time, if you look at, I have told several times that only bearish confirmation is if it draws below 78 and then 77 levels. Very clearly I had mentioned that these are stronger supports and it is respected. That now what to expect next week? Can we expect a breakout here? Can we expect it to fly high till these levels? And if yes, which position you should take in order to profit next week? We will see with the help of charts followed with indicators, and towards the end I will give you the trading levels and strategy for next. So do watch till the end, listen to it carefully, note down the levels, trade as per the levels. Also do not forget to like, share, subscribe and comment, and also not to forget the bell icon. Pressing the bell icon will keep you updated with the daily targets which I share for crude oil very early in the day with the Asia session. So do watch those also. Let's start. And first thing is, if you look at the weekly charts, couple of observations. Higher lows were seen, lower highs were seen till last week, and the last to last week, and the last week's candle was a typical breakout candle, I can say. However, the breakout was not so bullish. You can see still 82.6, which is a good resistance zone, and then 83.5 levels. It failed to go past 82.6 here, but at the same time closed in green. That is an important sign. Also it closed above 80. That is also an important sign, as it is definitely given a breakout. So next week, once it trades above 83, you can stay long above. Sorry, once it trades above 82, you can stay long above for 82.6 first, 83.5 next, and beyond that you can expect it to hit 84.5 and 85 levels. Possibility exists that it can give you very strong bullish momentum if it continues to trade bullish from here, as it is giving a breakout. Also, if you look at the channel highs on the weekly charts, you can observe that it is trading in this bearish channel. The highs of this channel now situated at around 88 levels, and yes, beyond 88, 92.5 is something which it has to sustain. So that is the first part. On the upside, possibility for it to achieve 88 also exists here. Now this is on the weekly charts. Also on the weekly charts, we did observe that it is giving you higher lows. In fact, this time it has breached the lows here. Try to attempt and achieve $70 levels. See, oil is trading in this expanding triangle. So probably from here, little bullishness can be expected. Now let's have a look at the daily charts. On the daily charts, first observation I shared you last week also, $70. Next base is at 74 and 75. And I shared with you this too, that it is trading with an increasingly bullish bias. But now at the same time, the highs of this channel are now situated at around 85, 85.5 levels. 85 definitely is a very good resistance. Now this is first part to it. Second is, just observe last two candles. Lower highs previous to previous candle and a flat bottom, and this candle is trying to break out. So once you see it trading about 82 levels, you can buy and then stay long for 82.6, then 83.5, and then 84, 85 levels to be seen. Beyond that, it can in fact achieve further highs. How high it can go, I will expect it to somewhere here at 85.5 levels. So this is one part to it on the daily charts. Also, if you look broadly on the daily charts, first thing is here at 92.5 double top, then this bearishness, then almost it is trying to break out of this zone. Once it gives a breakout, definitely you can expect that it may try to attempt and achieve 92.5, and in fact it can try to go past 100 also. So now is the time for us to stay alert for crude oil. It can give a breakout. Now look at the monthly charts. Higher lows are seen. I don't see it breaking these lows in the month of January. So far lower highs are seen. So possibility is there that it may consolidate because only 7 trading sessions are left. Next is higher highs and higher lows, which means 85, 85.5, in fact 86 as a very strong resistance zone. So possibility is there that it can give a good bullish move if it continues to trade above 82.6. You can stay long in oil for 85, 86 levels, which it may try to attempt and achieve towards the end of the month here. Now look at the monthly charts here. It appears that the oil has seen the bottom here, and with that it is trying to reverse. First it has to break past this zone at 92.5, then only you can expect that it has reversed completely, else this is a phase of consolidation and hence you should remain cautious. Yes, beyond for the next week and for the remaining trading sessions for January, stay long above 82.6 and then you can expect 85, 86 levels at least. That is the first resistance zone. Then the next is 88 and then beyond that it will go past 90 and 92.5. So this is the next part. Now let's have a look with the help of indicators. What does the indicators are suggesting here? Now look at the indicators here. See the 20 and 50 period moving average are crossing over. That is the first observation. Second is the 100 period moving average is giving it a tough resistance here at 82 levels. And hence staying above 82 stay long and then 82.6. Beyond that you can expect 83.5, 84, 85 and then 86 levels also. So this is on the indicators. On the daily charts, the directional movement here is bullish. The stochastic which was trading overbought has seen a cooling there. Probably it can reverse again. The MACD is still trading divergent and is still trading bullish here. See, it tried to converge but again trying to look upwards, trying to trade more bullish. RSI is also looking upwards here, indicating little strength. And if you look at the weekly chart, now on the weekly charts, important observation is, see the 20, 50, 100 period moving average were trading with divergence till here. It was trading bullish and then it is seen a sharper drop. Now here is a crossover between the 20 and 100 period moving average. If oil starts to reverse from here, then the things may change, and while 100 period moving average may remain flat, the 20 period moving average can reverse again smoothly on the upside. Now it is also giving it a very tough resistance here. This zone at 82, 83 levels, you can see all the resistances are coming here and probably it has to surpass this zone in order to trade bullish for 88, 90 or plus levels. Now if you look at directional movement here is bearish and it is trying to converge. Stochastic has seen a reversal trying to look downwards here. The MACD, interestingly, on the weekly charts has crossed over, and this crossover is happening at a bottom here. The possibility for oil to trade bullish from here exists, and hence I'll recommend you to stay long if you see it trading above 82.6 levels. And the RSI is also trying to look upwards, indicating strength there. Now look at the monthly. On the monthly charts, candle is trying to reverse here. It can probably in fact achieve the higher levels very fast, which is increasing bullishness. On the upside, there are resistances here also on the monthly charts as well. The directional movement was so far bullish, it is trying to converge but it is not yet crossed over, and hence I look forward for it to diverge again. That is to trade with increasing bullishness. See the stochastic which was trading overbought here for multiple weeks has seen a sharp drop there, and now with this drop it is trying to reverse. I did share this in my yearly analysis, annual analysis for oil also, that it is trading oversold. There is a possibility of a rise and hence you can expect a little more rise from here. But at the same time, the MACD on the monthly chart is trading bearish. It has seen the peak, probably looking forward to converge a bit. RSI trading flat, and hence this conversion still should not be considered as a bullish crossover till the time it still starts to diverge here again. Else what will happen? Looking forward to attempt and achieve the proximity, it can again start to diverge. Also we did see in our annual analysis that, see, 110 levels are something which it can retrace to in the near future before looking forward to a downward move again, as oil is trying to trade in this channel, and right now it is trying to retrace on the upside. That is my expectation. So this is what we can see on the charts. Time for me to define the levels and strategy for you all for the next week. And yes, if you want to learn the same art of trading profitably, identifying right trades, identifying right tools, techniques, and strategy in order to become a profitable and proficient trader, join my mentorship batch. The 19th batch is going to start on first week of February. Reach out to me for more details on same. My Telegram and email IDs are mentioned in the channel and video description. Do not miss this opportunity. The learnings can safeguard your capital and increase your capital as well. So do not miss the learnings. Let's start first on the next week's targets here. I will recommend you to buy. First is at level. First we look into the buying levels and then we'll see with the sell levels. You can buy here at 82.2. Once you see it trading above 82.2, stay long for 82.6, and beyond 82.6, target is 83, 83.5, and then 84. Beyond 84, directly it will lend to 85, that is the first target, and then 86. Now see this. Let me break into this. This is going to be very strong resistance. Then it will come to 84 and 85, and beyond 85, certainly 86 and 88 levels are achievable. Beyond that, 90 and 92.5. Remember, these are markets, anything is possible, and once it breaks out on the upside, it can show you very strong bullish momentum here. On the downside, where to sell? That is a very good question, because see, you have to trade on either which ways without any bias. The direction it goes, you just trade as per the direction. On the downside, I will recommend you to sell at 81.2, below that 80.5, and then 80. 80 is a very good support here on the downside. Only if it breaks below 80, you can still expect 79.5 and 79.2. These two levels are very, very important. Below 79.2, directly it will lead to 78, 77, and if it only and only if it breaks below 77, it will call for the bears till 75 and 74, which I don't think so that it is going to happen. I don't think so that it is going to break 74. However, markets don't run as per my thinking, and hence just trade with the levels, stick to the levels and trade as per the levels. Whenever you see your trade is in profit, shift your stop loss to your entry price, first part. Second is shift your stop loss to your first target, or keep closing 50% of the trades on the first targets and keep trading with the rest of the trades, such that you can book your capital, you can book your profits and preserve your capital. Trade accordingly, trade profitably, trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. Thank you very much. Have a great profitable trading week ahead. Thank you.